These richly valued internet stocks like Netflix and Twitter as recently as last week suffer when their results only underwhelm slightly. So what are you really focusing on these Alibaba results today?
Well, good morning. Thanks for having me. We are expecting a solid beat this quarter. It's coming in with good momentum. It's e-commerce juggernaut, as you know, and it keeps rolling along. All the basic fundamentals are solid. The consumption is strong. All the basic demand factors are strong. So I think the numbers will be very good. We are expecting solid revenue growth on top line, margins to stay steady in the above high 40% range. And then overall, just expect the fundamentals. The key thing to focus here on the earnings estimate is to see, or rather the earnings release, is to see how the mobile monetization is going. They need to close the gap between mobile monetization and the desktop monetization, because that's where the whole market is growing. So I think that'll be a key thing to follow. Other than that, the margins will be important to follow.
Yeah, just want to pick up on those margins because we saw that Alibaba's had very high EBITDA margin of 54.4%, operating margin of 43.4% in the last quarter. Can that be sustained? And if not, what sort of compression would be acceptable?
Well, I think they need to stay in the high 40% range. I think they will get the benefit of doubt. They are investing quite a bit in international markets, in other areas, but their core business is still solid. The online marketplaces are still solid. They still have a high market share. The competitors are catching up, but they're still far behind. So I think they have some runway before the others catch up. I think a high 40% in terms of EBITDA margin and revenue growth in the 50%, low 50% range I think the investors will be happy.